Hi, welcome to Market a Minute. This is a big week for Ohio State. Um, Michigan, you're just going to get your ass kicked from 3 years of frustration by this professional team that Ohio State has assembled. So sorry about that. The rotation appears to be happening in the markets. Small caps are up 24% off the bottom in August, and bond yields look like they're starting to cooperate. So the bond yield's fallen from 4.5 down to 4.25. So that could be a big positive for the overall markets. So stock market update. So we feel strongly that we're starting to see this rotation that has been anticipated for a number of years now, but we think that the value stocks or small caps or blue chips, mid caps are starting to outperform nicely relative to the overall market. And it's because of a couple of reasons. One is Trump's policies are very positive for the overall markets itself to broaden out. And then secondly, the mega cap stocks have gotten so overinflated that it's really difficult for them to go up much more in terms of market cap. So Trump's policies, by cutting government, it frees up dollars that can go into the private sector. His tax policies and deregulation is really positive for smaller mid-cap companies that are domiciled here in the U.S. So we think that that's a theme that's going to last a while, and it's so uh, undervalued some of those stocks that it could be have really significant returns. The AI theme, we don't think it's over, but we do think that it's going to be a lot harder for these large cap, mega cap technology stocks to outperform the overall markets. So if you think about Nvidia as an example, okay, I don't want to make anybody mad, except if you're from Michigan, that's okay. But Nvidia has a $3.3 trillion market cap. So if you compare that to the incremental revenues that they anticipate on picking up that drove this a whole cycle for the stock is only around $1 trillion here in a reasonable period of time. So $3.3 trillion and only $1 trillion in revenues. It's kind of like having a bond that has a negative yield to it. So how do you get paid back, right? So the market kind of feels like it's in a melt up, and the bullish sentiment is only 41% bulls now. It kind of surprises us with the how the market's behaving. So maybe there's more upside than what we're thinking. Bulls are 41, bears are 33. You can see this in the investor sentiment. Now, in the growth versus value theme, you know, going back and looking at what happened in the 90s, that was a major move in growth stocks. And then when growth stocks fell apart, we had a major move in value stocks. So from the 2 years prior to the peak, it moved roughly 50% to the peak. So that's not bad, a big move in a short period of time. It was strong. And then growth fell off in a big way, and value picked up the performance in the overall markets. Same way it looks like it's happening here so growth has been outperforming now for going on 18 years versus value. That's a really extended period of time. But if you look back at the last 4 years, so when Biden's in office, Biden's policy favored the big growth companies. Now, you can see here it's gone up 90% over those 4 years. So comparable to what happened in the 90s, but over a longer period of time. So we think that there's going to be a rotation from these large cap growth companies to the rest of the overall market, and in particular, really helping small cap space and value stocks. The technicals. So the 10-year, okay, got up to 4.5. Now it's 4.25. The yield's coming down nicely. We'd like to see it go through that 420 on the 200-day moving average to really give a spark to the overall stock market. The S&P declined a little bit, hit the 20-day and bounced off of it, still in a positive trend. Bitcoin is way overshot. The NASDAQ is clearly starting to lag. The Russell 2000 is taking off, Energy, that was a great trade. Healthcare looks like energy did, so starting to bottom. The IFA international stocks is starting to bottom, and then Veru, we're going to talk about that in a little bit more detail. Now, the S&P 500, as you mentioned, it's still in this nice uptrend. It's at the upper end of its band. We're concerned that it's been so strong. It did have that pullback here and then bounce, but we don't think it has a tremendous amount of upside because it's led by those mega cap stocks. We think that the rotation will probably happen after the first of the year in a bigger way, as people probably will start to take some profits after the first of the year. Bitcoin is a classical parabolic move, which generally is followed by a similar move down, back down in price. We do recognize that maybe the fundamentals are changing. So, Trump has endorsed this sector and is going to put some government money into it. So maybe there's more upside, but it sure has moved in a big way very quickly. The triple Qs have been flat since July. They're right around the 20-day moving average. They're losing momentum versus the rest of the overall market, and conversely, the Russell 2000 is gaining momentum versus the overall market, up very nicely from that low in August. Energy, I don't know if you remember this, but we in Market a Minute, we pointed out that this point right here, where that arrow is, that things look so bad in energy technically that it was a positive. The energy groups moved up nicely. Don't chase them here. We think that there could be still some catalysts depending on what happens in Russia and in the Middle East. There's some stocks we like a lot better than the group in general. Apache is a great way to play the oil sector. It's very leveraged to oil prices, has a really nice dividend yield on it. So if we do get a surprise, geopolitical surprise, that stock's going to move nicely, a lot better than what the overall sector is going to move at this point. Healthcare, okay, doesn't it look similar to where energy was? Kind of bottomed out here, and then and it's bouncing back. We like healthcare. We think the RFK appointment, just a little bit spook in the market, is starting to recover. The new FDA commissioner looks very solid, so we're pleased with that. IFA, so it looks like energy again, bottomed out, starting to drift up towards the 20-day moving average. So we're not crazy about international stocks, but they're a value that would fall into that value category that we mentioned earlier. And Veru, okay, this is my favorite healthcare stock at this point. Microcap, high risk. This is my favorite. So it could have a very big move in a short period of time. So you can see from the chart, got as high as $1.75, got down to 60 cents or lower. It's starting to move above the 20-day moving average. Now, we really like the setup here. You have the 20-day, the 50-day, the 100-day, and then the 200-day. As it incrementally bumps through these moving averages, the markets get more and more confident, and you can see when it's done this before, it's had a very nice move. So what's happening fundamentally? They have their phase 2B results coming out in January. We think it's going to look really positive. Again, a lot of risk around it. If it's not positive, there's downside still at these levels at 60 cents a share. There's still downside. But we think it's going to be positive. We have confidence in that data. And then the FDA. So this is what we're hearing, the buzz out of the FDA, is that the FDA is really concerned that these GLP-1 drugs from Lilly and Novo Nordisk, that patients lose too much lean muscle mass. So at this point, the only way the only company that really has anything that's far along in development is Veru. So Veru's drug, it preserves that lean muscle mass, and it helps you lose weight as well. So we think that this is an ideal acquisition target by the big drug companies. It would be a terrific pickup for Lilly and Novo Nordisk to pick up. So at $100 million market cap, I would put a value on this company at least $2 billion. So obviously at $100 million market cap, it's not going to get a $2 billion acquisition price. So the stock's going to have to move up. And I think by shifting the calendar to a new year, we had the J.P. Morgan conference right at the early of the year. This might get a lot of buzz around Wall Street. So this is a table pounding buy for me. You guys need to do your own homework on it, but it's a significant position in our emerging healthcare strategy. So hope everybody has a great Thanksgiving. Just remember the markets are at a high level in terms of valuation. There's an opportunity to make some serious money, say over the next 2 to 4 years in this rotation, pick our spots, and there's some sectors of the market that look interesting right now to play going into next year. So take care and come to my website, Patrick MCFA, and sign up for a hard copy of Market in a Minute.